Wouldn't it be cool if there was a Netflix for finance? Well, there is. It's called Real Vision, and it gives you unprecedented access to some of the most respected names in finance. Watch interviews with legends like Kyle Bass, Jeff Gundlach, Stanley Druckenmiller, and many, many more. If you want to be part of the Real Vision revolution, visit realvision.com/WSO. Hi, you're listening to the Wall Street Oasis podcast, a podcast about breaking into the world of finance, along with interviews with those who have. I'm Alex Grodnick, and on today's show, we're lucky to be joined by Dennis Miller, not the comedian and Trump advocate, but entertainment executive and investor. Dennis has had a super successful career working and investing at the intersection of the media and technology industries. He just started teaching a class at UCLA called Venture Capital for Technology and Entertainment Businesses. So welcome, Dennis.
Thank you.
Yeah.
How do you know I'm not voted for Trump and an entertainer?
You could be both.
Okay, we'll leave that alone.
we can answer that in some of in the end questions.
Okay.
So you've had this career where the first half of it was kind of started off working in entertainment, and then the second half working on venture capital investing. So that's what I'd like to structure this podcast of, is talking about the first half, the entertainment, and then we'll switch over to talking about the investing. So let's just jump in. How'd you get your start in your career? You went to Berkeley Law School, and so tell us about the beginning.
Yeah, very circuitous path. I started down here working for Manat, Phelps, Rothenberg & Tunney was the name of the firm. At the time, it's changed since then. And they had a number of different departments, but tax department, entertainment department. They represented some big musicians and some big feature film people. And so I got a taste of it when I was down here, and this is in 1982 when I graduated. And I got the bug a little bit, had some friends that were in the business and looked like they were doing fun, interesting things, a little more fun than doing tax law in the library at the law firm there. And my break was that my dad was in the clothing business, and he did television commercials for, as one of the first kind of clothing merchants out there to do TV. And he had an ad agency in the Valley on Ventura Boulevard, a company called Focus Media. And about a year into my law career, I met this guy and thought he was quite entrepreneurial. And he said, why don't you come over here? We're having a lot more fun doing advertising and buying media. And I was not that happy practicing law, so I took the leap. And that was my intro to the television business.
Okay. And then from there, what happened? How did you get to Turner?
That was from advertising. I learned a lot about how broadcasters work, how media gets bought, how the pricing is determined, kind of the cost structure of the business. Met some fairly serious folks at high levels at the various networks. And then from that, I met an actress named Shelley Duvall. Her boyfriend at the time was the son of Alan Cranston, the senator. Shelley was a character actress and had gotten some funding from big cable operators to make very cool original programming for cable. And that was long before you see what you see today. And so she had a series on Showtime called Fairy Tale Theater, which were public domain fairy tales with big stars that she brought to that from all of her relationships. So that company was called Think Entertainment, sat on top of a Chinese restaurant on Ventura Boulevard, and we made shows principally for cable. And we were owned by large cable operators. 2.5 years into it, I met some of those cable operators. They introduced me to Ted Turner, and Ted offered me an opportunity to run TNT in 1991, and that was a big step in my career, and I jumped and moved to Atlanta to run TNT.
So what was that like, meeting Ted?
Meeting Ted was very intimidating. He was on quite a roll then. CNN had just gone through the whole Baghdad live correspondence there that put them on the map in a significant way. TNT had just launched with kind of the old movies from MGM, and so he was this larger-than-life, fella in Atlanta. Very strong personality. We met at the Four Seasons Hotel in L.A., and I remember he asked me if I had had any businesses that I'd been involved in that didn't work out. And I said, yeah, I had a small television production company myself before Shelley Duvall that I'd been working on that never really turned out too much, and I owed some money and had to pay everybody back. And surprisingly, from that, he said, "Great, I love people who failed." And I was just so kind of comforting that he said that, because he told me all the times that he had screwed up and things hadn't worked out. He said, "But I'm glad you've had that experience. Why don't you come over here and run TNT?" And I was like, wow, that was unusual as a response. But in 1991, I left and moved to Atlanta.
To Atlanta to run TNT.
Exactly.
And so then what? How was that?
Great ride. Cable, original programming for cable networks, everything. The wave was behind us in a big way. We really couldn't do much wrong. The growth in subs out there was happening. We started with like 35 million homes. We were in close to 60 or 70 million homes by the time I left there, which was largely just a function of more and more people getting cable and satellite at the time. We had an old movie library, and Ted had a genius idea to get to the rights to the NBA to put on TNT, and that took us, from wherever we were sub count wise, almost doubled our subs there, because everybody wanted a national NBA game on Tuesday and Friday night. So that became a fixture at TNT, and we were doing original movies, and we got some attention for some of the movies. We did westerns, we did historical pieces, and we did some controversial ones. We did the big film called Gettysburg, which got a lot of attention about the Civil War. Ted was a huge Civil War buff. And it was a great ride. It gave you a lot of autonomy. It was a great cheerleader when things were working. And I went back and forth between LA, where our creative business was done, to Atlanta, where the cable network was run. But it was a very fun time. I was in my 30s, and I felt, on top of the world.
Wow, I mean, this was the heyday.
It was. It was as good as it gets. None of the talk about, cord cutting and all of that. There were very few cords to cut right then, and people were just so enamored of all the offerings. To go from 3 or 4 broadcast networks to, 300 channels was for the consumer was just a remarkable experience.
Right. And I'm almost 30, and I can't even imagine sitting across the table from Ted Turner and saying, "Here, why don't you come run one of my businesses?" So what were you thinking when this was happening?
I was thinking I was very lucky. I thought that, it was just a unique thing to go from a law to advertising to a character actress making, these, had a relatively small production company, to this big leap in my career. And I just felt very, fortunate. I felt like I had the right kind of mix of skills, because I'd been a lawyer and had done business and had done, creative work with Shelley there, and kind of understood how the business, works by that time. But it was a big risk on his part to have me come over there. And I just remember thinking, oh my God, I got the best job of a lifetime here. And when that happened, I was 34, when I got the job. So it was special.
And did you do a good job there?
I think I did. We ended up winning a number of ACE awards, they were called at the time, and we won the Emmy for Gettysburg when we made the film. We did another film called Heat Wave, which was about the Watts riots, which got a lot of attention, and that attention was what the cable network really wanted and needed to kind of stand out. We were able to get at the time we were getting, I think, 25, 26 cents a sub, and we ended up, at 50, 60 cents a sub by the end of the time I was there. I also got to oversee Turner Pictures, which was the film library that MGM owned. So all the remakes and restoration work and all of that came under my purview. And then we started making original features, later on in the mix here. So it was a pretty meteoric, rise there, and that set me up really in 95 to meet Mickey Shuloff, who was the head of Sony Corporation. And they were, at that time, Peter Guber and John Peters were leaving the organization. They had brought some new people in, and they were looking for a head of television at Sony. And so I'd had the cable experience, had the production and legal experience, and I was probably in my early 40s, and just thought, okay, this could be another great leap. And so I left Turner 5 years into it and came back to be executive vice president at Sony Pictures Entertainment to oversee the television group, there. And that was a kind of a quantum leap in terms of size. We were making a lot of shows for the network. We had a syndication company. We had a very big library of Columbia Pictures and TriStar Pictures there that we distributed around the world, and some very smart, talented people there. So, again, I was kind of like, I remember riding my bike with a friend in LA, and I said, well, I'm either going to be out of work or I'm going to have a really huge job at at Sony. And the good news was they made me an offer I couldn't refuse, to quote a famous movie, and jumped in 1996 to Sony.
And how is that time there different from the time at Turner? That was in LA principally.
I was in LA. Very different. It was very corporate. A lot of divisions, a lot of executives in various capacities there that you could utilize. It was a big ship. It was much more dysfunctional in terms of the relationship between Japan and Hollywood. The Japanese, I think, had felt that the experience with previous management had been less than satisfactory, and they wanted to go a different way. And I think from that, there was always a mistrust between the electronics group and the content creation group. I think that even goes on to this day, here. And they went through a few management changes when I was there. Nobuyuki Ide came in to the operation. Oga was gone. Mickey Shuloff left, and I think throughout it, they really looked at the company as a bunch of, kind of buccaneers out here in LA making too much money, making this content to feed their electronics division. And there had never been any real success, with the exception of Apple and iTunes, where for an electronic company to own the content had really, proven to be a very effective strategy. So I think it was kind of a misguided thesis. They'd written a lot of checks to own these assets, and anytime you came to them with doing something significant or big, they would say no. They really didn't want to expand significantly, and didn't. The only thing we did when I was there was Game Show Network, which we got started. So it wasn't very rewarding in terms of being able to launch new things. They did let the company expand internationally and make some investments in existing international networks. The most successful one was the Sony Entertainment Television in India. But apart from that, I'd say it was, while well-paying, it was not as rewarding as the more entrepreneurial, environment with Ted there.
Right, and it sounds like some of the same issues that we're thinking about today with using content to bolster other businesses, like with Amazon or with what AT&T is trying to do now. So, same issues, right?
Well, different in the sense that, those were, Sony never had a distribution platform, so to speak. They had the Walkman, and then they lost out, obviously, to all the stuff that happened, from Apple. But they didn't have, satellite capability. They did do a lot of the work on DirecTV on the hardware side, but ended up not owning any part of the asset. So for them to think that by, for the Walkman to control a certain amount of music or content was going to drive it, didn't prove true. They really needed to own as much of the content as they could, be agnostic with all of the providers, and that would have been a better strategy, but it was not to be. And they kind of lagged behind the other players who were buying up cable networks, diversifying, integrating horizontally. And as a result, you still see it today. Sony is one of the smaller, kind of pure play content companies out here in the U.S. versus Disney and Universal and what you've seen, from some of the bigger players. One day I think that'll change. I think the Japanese will ultimately sell the asset, but for now, they're kind of content being custodians of the company.
Sure. So then what?
From Sony,
it was Lionsgate, right?
Yes, I met Frank Giustra, who was a Canadian financial gentleman who'd done very well there, and he wanted to start something from scratch, which sounded more fun and entrepreneurial and a little crazy. And we spent some time together, and I jumped in like 98 to help him start Lionsgate. And he had a film executive and then myself on the TV side. And we had a French film library, a little animation company, but it was relatively small, a sub-$100 million company. But Frank was very entrepreneurial and knew the financial folks in Canada very well. And so we went public early. We struggled for quite a while, just trying to get a little bit of scale underneath us here. It takes a lot of capital to be in this business, and being a public entity, Canadian with relatively modest assets, we could never really get the stock price to an interesting level. But it was fun, giving it our best effort. The best thing I ever did there probably was hire Kevin Beggs, who's now the head of television at Lionsgate, and has done a phenomenal job, growing their business. They've got 60, 70 series on television today. And but we never got big enough to really be able to do the kind of expansion that we talked about. And in the middle of it, in the late 90s, you recall, everybody was in the tech madness phase. It was pre the bubble bursting. Stocks were valued at ridiculous prices. I had friends who were on paper worth gazillions of dollars, and I was getting a little jealous. And I was interested in how tech was going to impact the content business. And Frank was getting tired of having a stock under $2, and we thought there was probably better, management and better financing. So when Frank decided he was going to depart, I said, okay, I'm interested in this other arena. And the question you're going to ask me, which is how did I shift from media to tech, is I had the bug. I was interested, had a lot of friends in that business. I was never somebody who thought I would be corporate, for the rest of my life. And I think the Sony experience and even the frustration of being subscale with Lionsgate had gotten to me where I said, okay, I'm ready to do something different. And I was at the right age and time, and I started hosting a series of breakfasts for tech folks and media folks at the Four Seasons at 7:30 in the morning. And my first guest was Mark Cuban, who spoke right after he'd sold broadcast.com. And so I asked 50 people to come. 12 showed up, typical LA response, and or a testament to all my prowess out there. And he was so engaging, and he had made so much money from selling kind of a radio business basically to Yahoo, that the buzz started spreading that these might be interesting breakfasts to come to. And over time, we got 20 people, and then 25, and then the heads of agencies and the heads of studios, and had some wonderful speakers who came in and told their stories. And it was early days. This is still 99, 2000,
Right.
Which seems like eons ago. But that got picked up in the Wall Street Journal. Some people at Bear Stearns read about it. I got the call from Bear Stearns saying, would you be interested in joining as a partner in Constellation Ventures division of Bear Stearns that was doing tech investing, all before the bubble burst in, I think, March of 2000. And I jumped. And that really changed my career. I stayed here for a while, but then I moved to New York, which is where the headquarters of the business was, and there wasn't really much happening in LA. And that was a big leap.
Were you afraid when you like completely changed?
I was not afraid as much as I was, I was curious about how this thing worked. I didn't know anything about it, what a term sheet was like, how you do early stage investing, how you evaluate early stage entrepreneurs. I think we all tend to gravitate toward our areas of expertise. So I looked at businesses that had kind of subscription components to them, because I had worked in that space in cable before. It was, a daunting learning curve, and I didn't have the entrepreneurial network of folks, 25-year-olds who were, changing the world. And then, much more importantly than any of that, the bubble burst. So I could have been John Doerr, but everyone went running for the hills. We had a lot of companies that were not going to make it. So instead of investing, it was closing down companies, which is never very fun. And everyone looked at the tech bubble and just said, are you guys kidding me? This is nuts. How did we ever get so crazy? How did these valuations ever stand up? Well, they didn't, and they came crashing down. That kept a lot of money out of the marketplace. A lot of people and money drifted away. But it's a great time to invest because prices are cheap. Nobody can find money. If you've got it, you can strike a great deal. And I, as I said, moved to New York, stayed with it, and then started investing in businesses that I was somewhat familiar with. We had a couple of changes in the partnership there that allowed me to have more responsibility. And then 4 or 5 of the investments I made, were very successful. So that gave me renewed confidence that, hey, this was a good decision.
Yeah, that gave you a track record. But Bear Stearns had the stomach to go buy some of these distressed assets when it really wasn't their core business?
They didn't run it that way. I mean, their core business was obviously fixed income, trading, traditional banking. And obviously Ace Greenberg and his, and Jimmy Kane and that whole group had built a kind of, rebel with a cause in New York that was this scrappy investment bank, different from the white shoe banks that were out there. But they didn't escape the bubble either, bursting here. But they looked at this as a separate vehicle. They'd put up a third of the capital. The other 2/3 were raised separately. And they didn't, this was a rounding error for them in terms of whether the fund would work out or not. But I kind of got a sense, hey, they're not going to put in more money unless, we turn things around and recover from, 2000 here. So I invested in some cable networks and an online education company called K12 that we took public, and then Capital IQ, which was sold to FactSet. And from that, I was able to at least establish a modest, reputation as somebody who wasn't stupid, and at least got an idea about where to put money to work. And that's when I, in 2005, met the guys who were starting Spark Capital, Todd Degris and Santo Politi and Bijan Sabat. And they were kind of retired from where they, at an early age, from where they were. Todd had two enormous wins with Cutera and Akamai at Battery, and he had taken a year or two off and explored different passions. Santo had been at Charles River and Bankers Trust and done well. Bijan was with Steve Perlman at one of the first kind of email on television businesses here and web TV, and also had worked at Microsoft and Apple, and so they kind of came together, and I was the fourth partner there, and I was the Luddite of the group compared to their tech backgrounds, but they were interested in digital media. And to get into a venture firm from scratch is a really rare opportunity, financially as well as just being there to shape kind of the initial plans of the company. So I leaped in 2005, went with my family and moved up to Boston, and we started Spark.
And was your success in Constellation and the idea of success in Spark, was that from your operating experience? Is that how you were able to identify interesting companies?
I don't think so much the operational experience. It was, it's helpful when you get into the muck of just running a business and some of those things. But I'd say that, doing traditional kind of early stage investing is really more about pattern recognition of, an entrepreneur and a big idea and a marketplace. And most of the things, as we talked about in class, fail. So that you're taking some big bets. You need these things to win very big, not modestly perform in order to make back the losses and have a nice upside. So you're shooting for the stars here with these things. And that was a big change to go from Constellation was a little more kind of traditional extension of what I knew, some cable networks, some subscription businesses, but Spark was much more of the kind of, what you think about when you think about traditional VCs, which is let's go early, 25-year-old entrepreneur, wants to change the world, has come out of an interesting situation, demonstrated some grit and abilities and kind of the DNA to make it through all the tough times, and that's really where some of the biggest wins have come from.
Right, and Spark's got this great track record: Twitter, Oculus, Tumblr. Did you work on those deals?
Well, it's a partnership, so we all have to weigh in on all of those. The deal, Twitter and Tumblr were both Bijan Sabat brought both of those companies. I introduced Bijan to the guy behind Tumblr, but he was really the lead and got us there and was the advocate for that. Twitter, I was still shaking my head about a messaging service that would allow people to voyeuristically follow other people out there. That was a big concept, which we've all seen now has become Donald Trump's primary, public relations tool, for better or for worse. I would have never thought, what role it would have played in the last election, but it's significant. Big one. And no, I worked more on an ad tech company called Adapt TV that was early in the programmatic advertising business, where buyers and sellers come to an exchange. And we backed the gentleman who was the CTO at Shopping.com, Amir Ashkenazi, and then we ended up selling it to AOL for about $400+ million, and we had gotten in early in that company, so it was a very nice win. We also did a company called AdMeld, which was another exchange for display advertising, and that we sold to Google for about the same amount. And Oculus Rift happened after I had just left. I was still a venture partner there, but that was Santo Politi, who found that gentleman down in Irvine, who became kind of the leader of the first mover in the VR space there.
Sure. So what about this company that was like an early creator of online video?
Next New Networks, was mine, and those were guys that I knew from my former life. A very talented, creative group. Fred Seibert, who'd been the kind of leading creative person behind the Cartoon Network, and a brilliant marketeer, Herb Scannell, who'd run Nickelodeon, and then a cast of characters we filled it out with, and we, along with Goldman Sachs and a couple of other kind of significant angels, put the money in. We were early in the MCN space. There wasn't a lot of advertising support. YouTube was just coming on, but we thought a new form of digital content would take off, and we wanted to have a bet in that space. And we were early. We ended up making our money back by selling the company back to Google, but we were probably 2.5 years behind where Maker was, which we were headed in that direction, and we were the fastest growing, and Google saw that and said, hey, I want those people to be ambassadors here. But ultimately, timing is everything in the VC business, so we didn't get the win that we had hoped for.
Right. So then what, you made so much money that you didn't have to work anymore?
No, my father passed about 6 years ago. My family's all out of here. I have 3 sisters and 14 nieces and nephews and a couple young kids. And my wife was from Philadelphia, and we had, basically we had done very nicely, which I was, like that was a great thing to know financially. You're set for the rest of your life. But I moved back here to help with a bunch of family stuff because my dad had left some litigation and some messy situations here, and all the family was busy in various family rearing pursuits here. So I came back here to help the family, stayed on as a venture partner with Spark for another couple of years, and then ultimately being a satellite individual when the main office is in Boston and Monday morning you're discussing everything is not optimal in any sense because you're not there and digging up those companies. And my interests had kind of moved to somewhat later stage companies. I also got interested in some of the real estate stuff that the family was doing. And so I stayed here. We moved to Palisades, which is pretty good living. Mm-hmm. I liked Boston a lot too, but I preferred the weather out here. And had a lot of friends out here from my media days, and that's how it kind of led me to back into the media space with people, as we talked about earlier, like Harry Sloan and Jeff Sagansky. We, raised a couple of SPACs that we've used to go out and buy single assets out there. I've joined a few public boards, since that time, and a few not-for-profit endeavors here. But I'm
Sure.
back here.
So you have that fund. You were just looking at buying Playboy. I think it was talked about in.
Well, there's a fund called Double Eagle that I'm on the board of, and they've been rumored to be out there looking at licensing companies. And Playboy is one of the licensing companies because Playboy sold all of the traditional assets and now just licenses its moniker principally in Asia, which does very well, but. No, I wouldn't have pursued Playboy by itself as a opportunity for the SPAC, but it's one of a number of assets that they're looking at.
Right. And so now you're on these boards, and you're also on some boards of some not-for-profit, some charitable giving things. So that's kind of what I want to end up talking about is the concept of doing well by doing good and giving back and getting involved. I think that's super important in life. I mean, I hear teachers, this is probably, I'd like to hear, your idea for teaching is that I hear teachers are some of the most happy people, maybe not the richest people, but the idea that you can help others and give back. And so I'd love to hear about that part of your life now.
Yeah, I was looking for, some things to do, and I'd always had liked kids, always, grew up in a big family, had an interest in them, particularly at kind of young ages, and came across an opportunity with Green Dot, which manages 21 schools here in California. I think 19 in California, and then one in Memphis and one in Washington right now, just spreading out beyond California. But they were doing, exceptional work, taking very difficult situations where there was underperformance. Kids aren't getting into college, language barriers, kids coming in way behind grade levels, and bringing resources and skills to those situations to get these kids ready for college. It was run by a gentleman I knew, Marshall Tuck, who I had a lot of respect for, and then run by a gentleman named Marco Petruzzi, who I also like quite a bit, who came out of Bain, was very analytical, very data oriented, and they've really demonstrated the ability on public funding dollars to be able to accomplish very significant improvements. And with all of the troubled schools here in LA, I thought that was a good place to put some of my time and effort. So I joined their board, been on there for almost 3 years now. Also joined a board doing some work of getting more science and engineering and math professors into public schools here called NCORE STEM that Sherry Lansing started. And I think it's terribly important that that we all know that we're blessed with how we come into this world, the randomness of zip code arrivals here. And if you have been blessed as I have to where I was born, the family I had, to the career I've had, then you can't not look around and see a lot of the inequity that exists in the world. And nice thing is Ventures gives you some good tools, I think, to look at, do the analysis on which charities and which not-for-profits are really delivering a return. You really become more data specific. You look at the CEOs differently. And I've left a few just because I felt like they couldn't really sustain their model, as currently configured. But I went through a process, just like looking at a company to invest in, and said, these are the two I'd like to put my time into. And that's how I got there. And the school teaching thing, Harry Sloan and Jeff Sagansky, two media entrepreneurs who I'd worked with in the past, where Harry was teaching at UCLA. I came in and guested for some of their finals that they had, and liked the experience, liked the Anderson School, and Sanjay Sood said, hey, would you be interested in teaching a class? We've done entrepreneurship. We haven't done venture specifically, and from the inside perspective, and that sounded intriguing. So that's what led me to this recent class.
That's great. And so what would you say that excites you now? What are you most interested in doing?
I'd say, a couple things. I do education. I have a lot of interest in it. It's a very daunting arena. There's been a lot of thought and a lot of money and a lot of underperformance that's happened in the arena. It has a political challenge with the unions and with the monopoly that the public education has had in terms of doing one thing one way for a long time. That makes it really tough. It's very tough sledding to get the kind of changes that you'd like to see. When you see the business world and you see the global world moving so much quicker than the educational landscape here, then that disconnect is going to ultimately and is leading us to significant problems out there. So I think bringing some of the tools I gained from being an investor into that education world interests me quite a bit. I've got young kids, so they take up a chunk of time, who are avid soccer players, and I'm enjoying that because I waited a long time to have these kids. So I'm making sure I spend the requisite time, and that's thoroughly enjoyable. And then I only do like 1 or 2 deals a year. I look at a lot of things. I try to stay out of venture because I'm humble enough to know that even with really smart people, you get most of them wrong. And if you're not part of a firm, you tend to get a lot of adverse selection. If people get to me to put money into something, I'm often like, what went wrong? Why
Right.
What did the other 60 institutions say no that have much better diligence and information, and they're in the space, at any one time, versus just standing back and saying, oh, this deal came to me. So I'm pretty prudent about putting money to work, and I also venture's a very high risk game. So at this juncture in life, reducing that risk profile is part of the game plan. So I tend to look at things that are a little later stage that have EBITDA metrics, things that are unlikely to go to zero, may not have the same upside that a Twitter does, but are a little better from where I'm at in my life.
Sure. And the charter school effort, I think it's very interesting. That's what Eli Broad and Bill Gates, it's the same kind of concept of improving education. So how do people my age get involved in something like this? We're not sitting on a board. Is it through time? Is it through, how would you recommend MBAs getting involved? Because I think it's, like you said, it's tremendously important.
I think it's very easy in ways to, we're all so connected these days to go and audit some of these companies here. You can spend day, at the schools themselves. Green Dot has that program where you can go to Watts, you can go to Jordan High School, you can go to Inglewood and actually watch the teachers and the principal and the social workers and the team and what they do, and you get a taste of, does this feel interesting, good, or am I scared, or is this boring, or whatever your natural reaction is. I find LinkedIn to be incredibly helpful, when I want to connect with people I don't know. So I have my information there, and I use that all the time. I just went up to see some robot creators in Oakland a couple weeks ago. We're creating these like UFC fights for huge robots, and it intrigued me. And I reached out to the guy on LinkedIn, and next day he was back to me, and I saw him a week later. And I said, "Where else could you do that other than this connected world here?" But on the not-for-profit side, I think there's a lot of them. I think not all are particularly well run. A lot of them use up a lot of their invested capital in ways that I think don't necessarily benefit the cause here. But I think you can audit these places. I think, everyone, you see an area that you're interested in, whether it's water in Africa or education or malaria or inner city stuff, or there are so many worthy causes. And I think that my approach has just been like finding an area to invest in. I go and see who are the 6 people doing interesting things. I know somebody I know is connected to one of them, either 3 degrees away or 1 degree. Get to them. I find that people doing some of the best work in philanthropy are very quick to respond. And unlike sometimes in the business world, you're coming from a good place as opposed to, you just want to, get the best deal you can by investing in me here. So you start off at a nice place, and then you meet people you'd never meet otherwise, just from these not-for-profits who are doing a lot of amazing things, and it's very, very inspirational.
Right. So I think that's an important lesson, and we'll leave it there. So, Dennis, it was really fun speaking with you. Thanks for stopping by. I'm Alex Grodnick, and you've been listening to the Wall Street Oasis podcast. We have much more coming, so please stay with us. Also, I just wanted to mention the investment banking guides at Wall Street Oasis. Their guides are far and away better than anything else you can buy. When I was trying to get into investment banking, they played a huge part for me. They're so confident that it will help you succeed that if you buy a guide and for whatever reason you don't like it, they'll give you your money back. So go on to Wall Street Oasis, click IB Interview Guide, and when you buy it, make sure you select podcast is where you heard about it.